Hello there, this is Bruce at Fleet Capital Management. It is Saturday morning, July 1st, 2023. We're going to take a look at where the market stands right now that we've completed the first half of 2023. We're also going to take a quick look back starting January 1st of 2022, so I can very clearly show you some how we look at trends for a bear market and a bull market, and why I believe we'll never participate in another bear market. Let me show you that. But first, we need to say that the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please subscribe to this YouTube channel. You can click the alert button and you'll be alerted to each time I upload a new video. And with any questions, as always, you can always catch me, Bruce at fleetcapitalmanagement.com. Homepage of fleetcapitalmanagement.com has two buttons that are important over on the right-hand side. The bottom one will take you to our most recent market analysis video, and the top one will schedule a Zoom call with me. You'll go right to my calendar. We've had a pretty strong run-up the first half of this year. There is something going on that I don't like and a whole lot of things that I do like. So I want to show you both of those before we get to the charts. This is the thing I don't like. There are ways to measure retail investor fear and greed, and this is an inverse analysis. What I mean by inverse is when we get into the extreme greed category, the market tends to fall. When we are in the extreme fear category, the market tends to rise. So I'm not very happy about this. We'll see how that plays out. It doesn't guarantee that the market will go down, but it suggests that the market will go down. The reason it doesn't guarantee it is, since we're coming out of a bear market in 2022, and now we're in such a strong bull market, there's also something called FOMO, fear of missing out. And there is a possibility that we'll be okay in this extreme greed area for a while, because there's more money flowing into the market from people who have finally said, okay, the bear market is finally over. It's time for me to get in, or I'm going to miss out on any upside. So that's why normally this is kind of terrifying to me. It's not this time. It could go either way. So we'll take a look at that. Before we get to our chart, here's our trend matrix that we update each day. This was updated yesterday, and you can see on a daily basis, which is our most aggressive signals, we're in an up. On a weekly basis, which is group 2, more moderate signals, we're in an up. Pay attention to this for just a second, because we're going to look at this on the chart. When the 20 is over the 50 and the 50 is over the 200, we are in a bull market, clearly. And when the 10 is over the 20 on a weekly basis, we're in a bull market. So let's go back and take a look at a couple of things. Over here on the left-hand side, this is January 1st of 2022. This is the beginning of the bear market. And I don't have the 200-day on here because I just want to look at the 20 and the 50. The 20-day is the blue and the 50-day is the gold. And what you can see is when the 20 crossed below the 50, what happens is I do not buy stocks when the 20 is below the 50. Here was a little fake out. It's going to happen. But when the 20 is below the 50, I don't buy stocks. Here was another little run, and then we went down. Now, here was the bottom. Actually, let me grab an annotation tool real quick. Bear with me one second. Okay, so here was right here, the market bottom. The problem is we don't know that's going to be the bottom until we start making some higher lows, which we're doing here, and some higher highs. We didn't break this high yet. This would have looked like this. So we still don't know. But this was a higher high. So when we have that higher high and higher low, we are no longer in a bear market. And that's just how we take a look at those things. Let me go back to pointer here. Okay, so what I want you to see is by using that trade matrix, we can know whether we're in a time where we should be buying stocks or a time when we should not be buying stocks. And again, I don't have the 200-day on here yet because I'm not looking at full-on bear markets, because in full-on bear markets, which is when the 50 crosses below the 200, which happened right about here, if I remember correctly, then we can use inverse ETFs for group 1, meaning we will try to make money in a down market, but we don't do that. But for group 1, group 2, primarily, I just want you to understand that when the blue, the 20, is below the 50, the gold, we don't buy stocks. Now, if we were already in stocks, which we probably would have been, we always have stop management, and we would have been stopped out and gone to cash. When group 2 was using defined outcome ETFs primarily, we didn't liquidate those because we had a buffer down about 15% that we would get back. But the problem is, and I've spoken to a couple clients about this, is even though if it goes down 15%, we know we're going to get our money back, your account still goes down 15%. And that causes significant emotional duress. Less financial duress, because we know that's going to come back, but more emotional duress. So recently for group 2, I have liquidated, or I am in the process of liquidating, all of the defined outcome ETFs, because what I have discovered during this bear market portion and this 6-month run-up is that I can get you out of the market and into cash, which has no downside, much faster and much more efficient than I can the defined outcome ETFs, which still don't have a negative financial component as much as it has a negative emotional component. Hope that makes sense. So for group 2, once again, and this pertains to group 1 because group 1's not using defined outcome ETFs, if that 20 goes below that 50, and here's today or Friday, we will A, not buy any new securities, B, allow ourselves to be stopped out of what we're in, which will generate cash. And what we don't know when it goes down, here's a great example. This was just a little fake out. We probably wouldn't have gotten stopped out of most of our stocks, maybe a couple here, so we still would have been in and continued to ride up. But on this day, I would no longer add to securities because what I don't know is going to happen. I don't know. Here's one. I don't know how far down it's going to go. No one does. So the bottom line with this is I believe that using this adjusted system just a little bit, we will avoid another bear market ever in our history of being together or in our future of being together. So group 1 is a little bit more aggressive and does some other things. Group 1, for instance, may have bought some stocks during the bear market trying to benefit from this run. We bought some stocks and options, and actually they worked really well. Group 1 here may have bought a few things. Group 2 would not have bought anything. Now, group 3 is the most conservative. That's a group, if you're in group 3, you're basically saying downside protection is significantly more important to you than upside return. And for group 3, I will continue using defined outcome ETFs. But what happens is when we go into a bear market, I won't buy additional ones. I'll just buy maybe CDs or treasuries or something that absolutely has no downside. So we're making a couple minor adjustments because what we're trying to do is increase your return and decrease both your financial risk and your emotional risk, if I will, the emotions of seeing account values go down. So I hope that makes sense. This is the bear market. This is the first 6 months of this market. And I hope that becomes a little clearer as to why I show you these numbers every week. Because again, when the 20 is below the 50, we don't buy securities. And when the 50 is below the 200, it's a bear market and we can buy inverse securities. So I hope that makes sense. If it doesn't, just shoot me an email and let me know. So let me expand this chart so it's easier to read. And let's start adding a couple of our different indicators so we can see where we are. Here's the 20 and here's the 50. Let's add, whoops, I just added the hull, which is this green-red band. This is a very fast moving average. You can tell it's much faster than these moving averages because this crossed down to red long before this crossed below. Another thing that you should keep in mind is when the hull turns red, generally speaking, especially on an individual stock, I won't buy. I won't buy until it's green. So there are multiple layers of indicators that will tell me when is it safe to buy, when is it not safe to buy. If I go back to our ribbon and I put on, just for a moment, the 8-day moving average, that's now in white, you can see that the white is above the 8-day is above the 20. That's extremely strong. That's really, really strong. This is, I use the 8-day to trade many times, and I buy when the 8-day is above even the 20, because that shows me an extra layer of strength. I'm going to take that off for a second. Okay, let's add a few more things. Here's Super Trend. Super Trend, I use to tell me when we're in a trend, but more importantly, I use it for stop management. And I'll show you a couple stops that I have in place in just a few minutes. So yes, the price needs to be above the green Super Trend. Super Trend, to remind you, these dots are ATR dots, or average true range dots. Okay, and they're another helpful tool. This is called signals and overlays. Let me put that back on. Let's see. Here we go. And this is showing me where there are some significant order blocks that I can tell if there's more buy orders in the system or sell orders in the system. And all the way up, it's a little hard to see, there were more buy orders in the system. And you can see how the price just kind of kept riding that. So everything right now looks pretty good to me, except that extreme greed. Let's go to one last indicator. I love to use linear regression, because what this does is it tells me by the angle, kind of the strength of the bull market. I like to see about a 45-degree angle. This looks actually really, really good. If it was up a little bit higher, that'd be better, but this looks really good. When price breaks above the blue line, which is 2 standard deviations from the mean, okay, then I can almost assuredly say there's going to be a pullback. Now, this indicator changes every day because it drops the last day and adds the new day. About a week or so ago, these prices were just above the 2 standard deviation line. And I said to you I think it was last week on the video, I said I would expect a pullback, because it was outside the linear regression. And it did pull back for about a week, and now it's gone back up. We're still close to that upside of the linear regression, which is fine. We can ride that forever, and I'd be happy and you'd be happy. I don't want to see it break above. So right now we're in extreme greed on that sentiment indicator. This is close to above, but it's not above. So I wouldn't be surprised if we just kept going, but there's going to be some pullback, and that's very, 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 very normal. If I go back, and we're still looking at the S&P 500, and we see, let me take a couple of things off for you to try to help this be clearer. What we see here, and I'm also going to draw something for you here. Let's see here. Bear with me. Okay, so we're clearly in an uptrend here, and you can see that we've got higher highs, right? You see that? And we have pretty much higher lows. You can see that? Okay, so, but even in this uptrend, you've got to understand that we have pullbacks. There was a pullback. Here's a minor pullback. Here's a minor pullback. So when we have these pullbacks, and I would suggest that even if we went off of the absolute market low, this was part of a bull market, and here was a pullback. And you can see a couple things I want you to notice. The red hull is down during that pullback. So what did I tell you? When it turns red, I don't buy new stocks. Doesn't mean I'm going to sell current stocks. Just means I'm not going to buy new stocks. See how that was red? You see how that was red? That's what the hull does. And right now, the hull is kind of kissing, but it's not red. So we're still okay. So one lesson is, even in a bull market, we're going to have these pullbacks. Just like in a bear market, we have these retracements. That's all normal. It's all normal. I'll tell you when it's not normal based on what I'm seeing on the charts. Okay. So we may, let me get rid of those. We may have a bit of a pullback because of the extreme greed. We may have a bit of a pullback because of where we are on the linear regression line. If we go back above it again, I can almost assure you we will come back down. When we go below it right here, I can almost assure you, if we're still in an uptrend, that we'll bounce back up, because that's just how it works. It's called reversion to the mean. And that is a very classical style of investing. The only other thing I want to show you is I've got some strong momentum here. I have some strong momentum here. This is another ADX DI line. I have some strong momentum here. This is the true trend strength index. So everything looks good to me going forward. I'm not very worried about it. I am expecting just a little bit of pullback. So for those of you who are holding any cash, mostly group 2, I will slowly start to build back your portfolio with stocks on pullbacks. I'm just waiting for a little bit of a pullback, but I will start buying new positions for you. Our stocks, by the way, let me just show you. Let's see here. Our stocks are doing really well. This is as of yesterday. This is not, this is as of Thursday night's close, not yesterday night's close, because this company that produces this is in Great Britain and they're just a little bit further behind. But as of Thursday, our stocks picks were up 20.35%. The S&P was up 14.51%. So that's about a 25% increase in value, our stock picking. That's why I believe our stock picking is going to be better for you than the defined outcome, for all the reasons I've already covered. So with that said, I know I ran through a lot. I did have a client this past week help me understand that I should never make these videos over 30 minutes. So I appreciate that feedback. I don't know how long we've been running. Actually, we're at 18 minutes, so I'm doing really well, but that's why I'm speaking fast. If you have any questions, let me know. For right now, I think things look good. July, August, September are sometimes weird months, not very good. I don't know what's going to happen this year, but a lot of times I'll be watching for that. I think we'll have another huge run up into the end of the year. I don't think inflation is a factor at all whatsoever. I know I've been saying that for a long time. I think inflation is pretty much dying quickly. I also don't think, from my readings, that we're going into any kind of a severe recession. I know there's a lot of talk on the news about that. I think they're kind of nuts. So I don't think that's going to happen. So I kind of feel like this is a really good market, and let's just continue to ride. I did promise I'd show you a couple of stops. So every single day, here's Builder. This is one of our wonderful stocks that's doing great. This level down here around $93, that's where we went into it. This was our initial stop. I stop is an initial stop. And then I look at the price action each and every day after the close, and I raise our stop to what I consider as an intelligent level based on a number of things, based on the ATR dots. And you can see we're right down here on the ATR. There's the 20-day moving average. I have the hull is pointing up. So, I've just got a number of reasons to believe this is a pretty good spot for our stop. And, if on Monday the price goes up again, well, we'll raise our stop again. We'll raise it forever until we can't. Let's see, here's FTNT, same thing. We're just now above our entry point, which means if this price comes down and stops us out, we can't lose any of our initial principal because our stop is above our entry point. We've got a lot of good stocks. I don't know. Now, see how this hull is red? It was red, and I tightened up my stop to just below that swing low. It looks like that hull is about to turn back green. But so I use a number of these indicators to help me identify where should I have my stop. Here's OC. OC is right just at, maybe above, it stuck its nose above the linear regression. I wouldn't be surprised if we see a little bit of a pullback in OC. So I'm looking at lots of different metrics to figure out where to put my stop. Here's Schwab, which really hasn't run very far yet. We are above our entry, but our stop is still below our entry. So I think that this was its bottom, and I think this is about to turn back north. We'll see, and we'll ride it as long as we can. Tesla has been rocking and rolling, but there was our price. The hull has just started to turn a little bit red. Here's our stop. You can see it's right below what's called a swing low, and I'm below our 20-day moving average. So again, and we're way above our entry. So that's the story for today. I know I went fast. I just wanted to kind of give you a big picture view of the markets from January 22nd to now, June 30th of 2023. I hope this was helpful in some way, shape, or form. If there's anything particular that you would like me to cover in these videos, you need to let me know. If there's anything that you find to be a waste of time in these videos, you need to let me know. I do these videos for you. I don't do them for me. I don't need these videos. So please give me guidance and let me know what you like to see, and I will do my best to bring it to these videos so that they are, in fact, worth more of your time. So that's a story. We kept it under 30 minutes. I hope everybody's happy. Have a wonderful, safe July 4th weekend. Just so you know, the markets will be open on Monday, but only for a half a day, and then closed on Tuesday, July 4th. And I'll remind you of that in my emails. Talk to you soon. Have a great weekend. Bye-bye.